where would you think the virtual bank may be 5 years down the line?
I think we, at the end of our panel, we are start talking about the landscape and the challenges that the bank has now. And first thing I can say is that the industry is changing a lot in terms of players. So maybe banking is the word that it will be different in the future in terms of there are a lot of stakeholders in the ecosystem that collaborates and integrate and operates between them, like big tech, like fintech, all the ones that you have just mentioned. So I imagine that the evolution of the financial services are in a more diverse structure of different stakeholders playing all together, with a customer-centric opportunities.
I'll be a bit anecdotal. So if you think about 70s, 80s, and 90s movies, today we have a lot of reality in terms of what we dreamt of back in 10 years ago, 15 years ago. So if we were to fast forward 5 years, I think everything we're talking about here would be in fruition in one way or another, and at different stages in different places, right? Depending on infrastructure, depending on, again, regulation, customer behavior, but definitely a lot more, substantially a lot more digital, as infrastructure will enhance as well, allowing more applications, more data, more richness in people's hands, whether you call it a mobile or a laptop or on the go or whatever it is. So there's definitely, I would say 80% of what we're talking about will become history, and we'll be still looking forward on how to bank through your fingernail or whatever it is that's gonna come in 5 years' time.
We are already banking with our fingers. So there was an experiment in Australia last year by Bankwest, which is a challenger bank. They had created a ring as a device, which replaced all your data into the ring with a chip on it. So you just need to tap the ring on the card POS or any other terminal. It'll make the payments. You could do anything with it. So
is that a problem when you get divorced, Sandeep, with the ring? The ring's going to go.
I guess it is a problem. So interesting security problem did prop up out of that, right? You do learn things when you attempt, right? And there was a security problem that popped up was they started figuring out that people could tap a POS. You walking around in a crowded train station or something could tap a POS and it would make a payment happen and beep on your phone by the time the person's gone. So these are some of the security issues they did unearth. I guess increasingly, we were worried about physical security through the 70s, 80s, and 90s, and that's why the high street banks existed, according to me, and that's the learning I've always had. But cybersecurity is becoming a big thing now. It is indeed a reality. As Mohammed just said, what you thought of 30 years ago is now reality, and similarly, we will need to address that issue as well with banking as we move forward. But in my mind, banking probably will become invisible. As today, we use so many services, the real service provider isn't right in front of you at this point in time. And I believe that's what many of the banks that we talk to kind of are saying, that they want to become invisible. Like, for instance, you're making a furniture purchase, there is a bank really involved in that transaction as well, right? You're either using a credit card, you're making a payment, not just the payment and the purchase, but let's say it's an ecosystem where you're buying a home, you're buying a furniture, all of it, right? And the bank is just somewhere in there, but you're not really visible in your face. And I think invisible banking is what I would call the reality in the next 5 years. They probably become part of every single transaction, just that you wouldn't feel it.
At who the future customer of the bank is going to be. And if I'm looking at their behavior, at their mindsets, basically at the moment they want quick services. They don't have time to stay in the branches and wait for them to be served. They want flexibility, and besides, many of them who are students now, they are doing even their learning online. So if I'm thinking as being my customer, then I would definitely say there will be increased need for virtual banking. And another thing I would also add is that many companies are now reconsidering whether they do need actually the facilities, the head office quarters, and the sizes they have. because now they are used to having their employees working from home. Work is actually taking place. So is it going to be more efficient for them to have a lower physical presence and go virtual? Because that's also from companies' perspective, they will be having pressure in terms of profitability, especially with the increased competition of the challenger banks and fintech companies also competing with banks. So that would definitely be a consideration. And as I mentioned earlier, I think the banks will have a physical presence more in terms of advisory role. And the way I envisage the branches is actually something similar to a cafe. So people will be going there and it will be a very personalized kind of service, because the routine banking transactions, I think, are going to be all virtual.
It's okay. Someone else mentioned invisibility, and I think you're going to get more of that. I think you're going to get the physical and the digital merging a little bit more to create a much increased experience for the customer. The customers don't have time to go to. I remember one senior person within a bank in the UAE talked about the branches being the waiting room, the death of graveyard for customers, basically. And I think if anyone's been to a branch recently, that is kind of the output. So I think the idea that you can have some kind of virtual assistant, but you can still rely on the kind of infrastructure and the advice that a bank can offer, but in a much more fluid manner, I think is going to be the way it's going to go. And I don't think we're going to see, much more of a kind of personal experience with maybe, sales reps coming to visit you in DeLoreans.
I completely agree. I think the real estate footprint of banking is something which is definitely diminishing, and it will probably be diminished within 5 years from now. I definitely see that there'll be a rise in big tech providing banking services for all the platforms we're ingrained in with Facebook's, Apple's, Amazon's, Google's of the world, and the telcos, which we touched about in the closing comments. Those were the guys that drive banking services for us, just because they're so ingrained into our lives. In terms of I see costs and fees of banking also being driven down for the consumer as well, being product orientated rather than, as Wasim said, on transaction fee orientated. So actually providing an end service to the consumer at a really high standard. And just trying to make banking and payments easier in general to access. So providing banking services to those that can't actually access finance globally right now, which is over 2/3 of the world's population. So we will have a much more open ecosystem and far more accessible as far as I can see.
My general view is 10 years from now, things will be very, very different. 5 years from now, we'll be on a conveyor belt for change. That's pretty much where we are. So I think change has started. I think change is going to accelerate significantly. I don't think, almost kind of pick up what Wasim said, I'm not entirely convinced in 5 years things will be that different. I think there'll be all the foundations, the building blocks will be in place to allow then the next 5 years to really accelerate that growth. But a lot of it comes down to, it does come to those foundation blocks, and that depends on different geographies as well. So a classic example is what happened in Africa with the telcos. Okay, so in Africa, you look at mainland Europe, massive infrastructure with cables everywhere. In Africa, that didn't happen. They went straight to mobile. And I think that's where you could see things moving very quickly. So I go back to my example earlier of Nubank in Brazil. They've got 25 million customers. It's a challenger bank. 25 million customers in the space of, I think, something like 2 or 3 years. So you can see massive growth in certain particularly developing countries and economies. But really, I think foundations, next 5 years, massive change, 10 years.
I think retail banking and digital platform eventually will be a marketplace, not only providing banking, but also leveraging in other platforms that provide services and integrate these services through a payment system and mechanism between credit, assets, and liabilities to make one ecosystem that will profit out of small bits and pieces of fees and commissions here and there and play on higher scale volumes and STP processes.